Welcome to Taxing Poetic. I am your host, Tim Howe.
And I'm your other host, Jenny Carter.
Along with our esteemed producer, as always, JB.
Hello.
And today we are going to be talking about crypto and virtual currency and the impacts on sales and use tax. And as always, this episode is brought to you by Synexus Tax Solutions. Hey, Jenny.
Hi.
How are you?
I'm good.
Awesome.
I'm going to open this episode with my normal haiku.
I love it.
Are you ready?
A crypto haiku. Here we go.
Okay.
It'll be virtual.
This is going to kick us off. Okay. It'll be virtual. Oh, but okay. All right. Cryptocurrency. You are pretty confusing. Is it like Minecraft? Because this will just tee you up that I'm going to let you two do all the Taxing Poetic this episode, because I have taken 2 crypto classes and I still know nothing, I feel like.
It is a confusing topic, and it is just rapidly changing. And so I think JB had kind of prefaced me, just to be in full disclosure. He said, you better come out and tell everyone that this is going to change dynamically. And it's the truth. I mean, just like the value of cryptocurrency changes every single day, if not every single hour and every minute. The tax laws and the treatment of cryptocurrency is a radically changing environment, right? And I know enough about cryptocurrency to be dangerous. I can speak intelligently to it. I know enough about it. You probably talk to my nephews, and they would know 10 times more about crypto than I do. But it is quite interesting when you start looking at the overall tax impacts of cryptocurrency. I think we're going to start off and maybe even talk a little bit about, income tax impacts and what would happen, in a generic cryptocurrency type transaction, and whether you have capital gains or losses, and how are you actually tracking your basis of the cryptocurrency, and what does that basis look like, and how does that impact your overall income tax. But then we're going to get into the meat of it, which is sales and use tax and the impacts on certain types of crypto transactions and how certain states are actually treating it, right?
Should we start with like a sales tax 101 or like our crypto 101?
Yeah, we should just talk about crypto in general and what it is.
Well, because
right?
Per my haiku, I'm like, I know they're mining for something like Minecraft. And so, and they're opening boxes, and it's like a Super Mario Brothers or something.
Yeah.
And then there's stars that come out of the boxes. And then that's about all I know.
And to be honest with you, like the whole mining component, we should probably maybe even have an episode in the future of somebody who's a crypto miner that understands that entire process and how that works. All I know is they set up huge server farms that can, basically consume massive amounts of power to be mining for Bitcoins and mining for other types of cryptocurrency. And they're basically looking for certain types of token IDs or something like that basically allows them to increase, and capture value of Bitcoins at that point. It's interesting. I in all honesty, that component of the cryptocurrency market, I really don't understand.
Same. I'm like, it's Super Mario Brothers. Like, yeah. I don't know. Like,
I don't know. It's a very interesting facet of, and I think why regulators have a real problem with it, right? Like you can't go out mining for dollars, right? I mean, some people could say, well, yeah, you can go out and collect cans in New York City and basically turn them in for their deposits and
that helps me a little. Okay.
Yeah, and get money back, right?
Okay.
Mine for gold.
You could mine for gold. You can mine. Hey, you can go to that national. What is it? The state park in Arkansas and get diamonds, right? And
for real?
Yeah, there's a state park in Arkansas that you can go to. Some dude just yoked out like a 4-carat diamond or 5-carat diamond or something like a month ago. Yeah, it's a big state park that you can turn around and go and find diamonds.
I mean, all money is confusing if you really. I mean,
it's true.
Have you ever read about space? It's just diamonds up there. It's just all diamonds. We just don't have that many down here, so we're like, these are fancy.
Yeah, exactly.
So we don't know.
Well, and also, the rumor is that like companies like De Beers that control like majority of the diamonds in the world, if they released all the diamonds that they actually have onto the market, the value of a diamond would deflate to like
100%.
It would deflate to like zero. But they naturally hold and keep the diamonds actually artificial.
And that's
inflate their
kind of
price.
the idea behind Bitcoin as well, is that there is a finite amount, and every 4 years it halves. So like eventually there'll only be 21 million, and then that's it. It stops doing that, and they don't make any. You can't make any more. So
Okay.
It's actually something that gets financed. But cryptocurrency, just the definition, is a digital money that doesn't require a bank or financial institution to verify transactions for you to make a purchase or an investment.
Okay.
So it's on its own system. If a bank were to crash, you could still have a Bitcoin.
Okay.
Yeah,
All right.
and it is why it proliferates and screams, non-standard transactions. And we talk about non-standard transactions. This is why crypto's gotten such a bad name for so long. You're talking, drug lords and other types of people who are, trading and using Bitcoin because it's not traceable, right? You can't trace it. You can't follow it. You can't really, identify anything that happens, in a crypto transaction because there's no financial institution or, should I say regulatory agency that actually tracks the movement of crypto.
So it is like Mario Brothers. There's like Bowser, and he's like, the drug lords and crypto lords are trying to like defeat you.
Well, Starbucks accepts Bitcoin. It's not all Bowser's.
It's not all
Bowsers.
No, I mean,
Okay.
and that's the thing is that there's a number of legitimate institutions that accept Bitcoin. I mean, we've got a country now, right? El Salvador, that pegged their national currency to be Bitcoin. And
Really?
Yep. And so it's, it's legit. It's legit
Okay.
and on a number of different facets. But at the same time, you also have a large component of the crypto market that is truly what we would consider to be dark web or black market type transactions because they just can't be traced.
Oh,
If you
certainly
lose a
is.
Bitcoin, like if somebody steals a Bitcoin from you, you're never going to find it again.
Oh,
You're never
really?
going to get it. Yeah. There's no
Well,
tracing it. There's no finding it.
And I like your analogies from earlier, like with the picking up the cans or mining for gold. So basically, it's the same. Like if I lost $20 in the street and someone picked it up, like
Yeah.
how is
in all honesty.
anyone? How are you going to prove that was?
But see, the thing is if I also exchange $50,000 with you and you go to the bank and you deposit that $50,000, the bank actually has to record that $50,000 transaction to the IRS.
Okay.
And all of that stuff gets recorded with your name on it and gets reported to the IRS as quote unquote
Okay.
like income, right? And it would be something that you would ultimately hopefully report on your income tax return. Otherwise, people are going to get some questions to you as to why you didn't report it. But with Bitcoin, you don't have that. That's why they ask you on your federal income tax return, right? Of, hey, did you, one of the big things at any time during this year, did you receive, sell, exchange, or dispose of any financial interest in any virtual currency? They're giving you the opportunity to come forth and be forthright with it. And that way, they're also kind of trapping you that if they ultimately ever find that you're transacting in millions of dollars in Bitcoin and you didn't ever report it, guess what? You're going to owe income tax on it.
Okay.
Right? So it's a very dynamic and interesting environment that the U.S. is trying, and other countries, frankly, are trying to get their arms around. Right? China has like basically
basically outlawed.
they
it.
outlawed.
Oh, really?
Yeah, China has basically outlawed Bitcoin.
Oh, wow.
Well, and there's a lot of fraud. I mean, SBF, right? Sam Bankman-Fried. You go read the entire stories about him and his investment firm
right.
FTX, and I mean that story in and of itself and how huge it is. And if anybody, I mean, this is going to be an amazing movie when somebody turns around and turns it in. But I mean, this is a guy that was effectively just came up with this whole currency, cryptocurrency, like kind of exchange market, and then had a fund that went along with it. And he started borrowing money from the fund illegally and using it to fund his business operations, which you're totally not supposed to do. It's against SEC regulations and a bunch of other regulations. And guess what? That's why he's getting ready to go to jail. But it's very, very interesting when you hear and peel back all the layers of that onion. I mean, you have people like Tom Brady involved.
I was just about to say that's why they think Tom Brady and Giselle got divorced.
Ah,
That's what I'm hoping anyway.
oh my God.
Because maybe they'll get back together.
Lost a lot of money.
Queen
know.
of pop culture references.
Yes, but for real, they were like, because of his investment in Bitcoin or whatever.
Yeah, with FTX.
Yeah, they were trying to limit liability for him or her, whatever. So yes, here's hoping. Fingers crossed.
Well,
So-
at the end of the day, it's a very, very fluid and dark world to kind of get involved in. But we're going to start talking a little bit about sales tax impacts of it and what actually happens when you transact in Bitcoin.
Okay.
So we started that.
Or not even just Bitcoin, but all virtual currencies. And virtual currencies are a number of things, right? We have Dogecoin, right? When you talk about Elon and the stuff that he did around Dogecoin early
Shiba
this year.
Inu.
Shiba Inu. Yes. Yeah.
I think probably for the ease of our listeners, we'll probably just talk about Bitcoin.
Yeah,
just
exactly.
just
Well, an ease
there's a lot of them.
for me, Jenny, because
Yes.
so Bitcoin.
You have
is
Ethereum, you have Doge, you have Shiba Inu, you got
Solar.
Yeah.
A lot of different.
there's a
ones.
lot of different coins out there. I mean, anybody can make up a coin every day, but see what you also have in these types of scenarios is people getting busted for artificial inflation of a currency. So you go and you latch yourself on to a couple of celebrities and you tell these celebrities, hey, go out on your Instagram and other platforms and start talking about this awesome coin. And then people will turn around and start buying the coin like crazy and it shoots the value up. And then what these guys do, they call them pump and dump schemes, right? So they pump the value of these currencies up super high. And then all the folks that are holding a bunch of the coins start dumping them and selling them. And it causes the currency to crash. So the people who are the founders and own the majority of the coin stake and made out like bandits when they sold it when it was high, all the rest of us cretins and laymen that basically followed on to the entire hype of the transaction are now left with something that's completely worthless.
So what you're saying is we should have a Synexus coin.
Go ahead.
Go ahead. Everybody else starts
If
one.
anyone can create a coin, or just Jenny coin,
And you can have Timmy coin.
Timmy coin.
There you go.
JB coin.
See who does better.
Yeah.
Exactly.
Who can get the biggest celebrity? JB's my celebrity.
I love it.
Okay, so for the sake of listeners and myself, we're going to use the word Bitcoin, which is a type of cryptocurrency.
We're going to really talk about things in terms of Bitcoin. That's the one that's the most sort
Okay.
of like accepted. If
It's
they
widely
start to, if they start to talk about regulatory things with cryptocurrency, they're talking about Bitcoin ETFs and there's things. It's really going to be. It's all going to come down to Bitcoin and less of the shit coin, which is what the other ones are called.
That's exactly it.
Yes.
Yeah, I mean, you can actually find, and there's a gas station that's I know up in Hamilton Mill, around an area where I live. It's basically they actually have an ATM that is a Bitcoin ATM.
I've seen those.
Yeah, to where you
Really?
can convert, you can log into your account and you can convert Bitcoin into US dollar and actually withdraw US dollars right there.
Yep.
And they shave off a percentage. Yep.
Wow.
So back to we started to talk about the
Yes.
We've been all over
Starbucks
the map.
example, but so Starbucks, for example, will accept Bitcoin. So question for you, Tim, would be if I go into Starbucks today and I buy a cup of coffee, Bitcoin right now is worth $43,120. Mm-hmm. Do I pay sales tax at the end of that year on the 43,000, or does it change depending on the value of the coin? Do I see later how much sales tax I pay?
Well, it would be, if you're talking right now, given the time that we're discussing this, I guess you could technically say the end of the year because it'd be the end of December, right?
Mm-hmm.
But if it would be the end of the month, right? That's when your sales tax would have to be reported. So naturally, it depends on the state. Certain states say that it's the value of the advertised price of the transaction that you would pay sales tax on. So I think Washington's one of those states. So Washington would say, okay, if you're put on a menu board that the cost of a cup of coffee is $5, you're going to pay sales tax on the $5, regardless of when the value of the currency is. So if you exchange Bitcoin and its value on that day was $4.90, and it grows to $5.10, hey, guess what? You ultimately made out like a bandit because you're only paying tax on the $5, sales tax on the $5. Now, other states like New Jersey and New York, they'll say you owe sales tax based off of the value of the coin on the day that it was exchanged or received.
So the 510.
That's right. It would be the 510 or let's say the 490.
Okay.
Right? So much more documentation intensive. There's a lot more required in those particular jurisdictions to show when you actually received the coin, what the value was at that specific time when you took possession of it, and things of that nature. Whereas in Washington, it's just like, we don't care. This is ultimately an accounting issue that you need to account for how long you hold on Bitcoin before you convert it into US dollars. And we'll talk about all that here in a minute. But there are two differing fields of thoughts. And the two differing fields of thoughts are, is it the advertised price or is it the coin price? Obviously, as usual, the states can't come to an agreement.
So Tim, can you explain to me what the benefits are for how the different states value Bitcoin for different transactions.
So like, so if you're looking at Washington versus New Jersey and New York, Washington's really getting no benefit because all they're doing is what they've done historically, which is just saying, okay, whatever the value of a transaction is on that particular day is like, or the advertised price, is on that particular day, it is what you pay sales tax on.
Okay.
So if I valued a chicken sandwich transaction and my meal price on a chicken sandwich transaction is $4, I'm getting tax on the $4, regardless of the value of the currency that I use.
Okay.
But what New Jersey and New York are doing is they're saying, hey, this thing fluctuates a lot. There could be some benefit or, we could have some risk of losing some money, but we're going to do it based off of the value of the currency at the date that it was exchanged, right? At the date that it was received by the state. Now, that causes some serious documentation issues, right? You have to basically document, okay, well, here is the value. Like, what I'm guessing is here was the advertised price of the transaction. Here's the type of coin that was used. Here's the actual date that the consideration was exchanged for that coin and when possessory interest actually occurred and changed hands. And then guess what? This is now the value of the currency at that particular time. And that is what the sales tax is going to be owed on. So if I had a $5,000 used car and I bought it with $5,000 worth of Bitcoin, well, guess what? Then, 2 days later, the value of Bitcoin increased to $5,500. Well, then I'm going to end up paying sales tax on the $5,500. Okay. Because that was the value of the Bitcoin at that point.
And that's the New Jersey, New York way?
That's the New Jersey and New York way.
Okay.
Yep.
So they're kind of gambling on...
They kind of are gambling,
yeah.
Right? And it's really kind of strange that they would do that, but hey, that's fine. You ultimately are making more money.
You could make out if it goes down. So if it's worth $43,000 today and it goes down to worth $20,000 in 5 days, which we've seen happen before, you pay significantly less tax.
Right. And so the consumer makes out and the states lose out, right? So that's the thing. They're risking. They're taking a total value risk of the fact that, it's going to ultimately they're betting on the fact that hopefully it's going to go up.
Okay.
Yeah.
Wow. That sounds like a big gamble. Why not just do it on the on the price?
I completely agree. And I do not know why.
Okay. So
I don't understand New Jersey and New York's justification behind it, except for the fact that I think the value of the currency, because it's changing so drastically, they just want to make it easy from a measurement standpoint to say, well, here's how much it was worth at the time that it was exchanged. Boom. That's what we're going to turn around and tax you on, right, for the exchange of the consideration. Again, I haven't done enough research to understand their justifications. I'm sure I can read their regs and probably find out why. It doesn't make a lot of sense to me.
We can ask Donna to research it.
Yeah. And this is the problem. I frankly have not really spent a lot of time on this, type of work and looking at this stuff because it's such in its infancy, right? It's the same thing. The federal government hasn't been able to do anything regarding the regulations of cryptocurrency. And it's just such a highly volatile market that hasn't really played a lot into the sales and use tax marketplace yet. There's a lot of stuff, transactions that occur on, you hear about blockchain and things of that nature. A lot of those, we're even dealing with basic sales tax issues because, okay, well, if I can't trace cryptocurrency and I don't know who started the transaction and who actually sold it, they're not going to want to report where the stuff goes either. So I don't know where to appropriately tax it. So how do I know where it's being shipped? Right now, there's a lot of above the board businesses, I'm sure, that want to, like Ethereum is a great, it's been a currency that a lot of people have talked about, that it's a business currency. People want to use it for, e-commerce and business type transactions. You're going to see and be able to, understand where goods are being delivered and all this other stuff so that we can appropriately tax transactions based off of destination-based sourcing. Some of these others, though, like with Bitcoin and stuff like that, if you're not recording a ship to address or where somebody's located, how are you going to tax something? Don't know.
Are these the only 3 states that have passed Bitcoin legislation?
It's the ones that I've focused on, I've looked at for this episode, but frankly, I haven't done a deep dive to see if any of the other states have actually addressed it. No.
Yeah, I was just curious.
Well, if you were somebody who's thinking about their company is like, okay, I'm going to start to accept Bitcoin, what kind of, what should they be prepared to talk to you about?
If you're going to accept Bitcoin and the thing is that
Like, what if some of our online retailer clients, start accepting Bitcoin? What are we going to tell them?
Go talk to an attorney. I mean, in all honesty, there are so many other questions that I have regarding Bitcoin and the usage of Bitcoin that, I mean, it just concerns me as a business owner because it'd be like somebody coming to me and saying, hey, I want to pay you in Bitcoin. I don't know if I'm going to accept it, right? And the reason I don't know if I'm going to accept it because I'm assuming a risk. I mean, you look at the volatility of Bitcoin, it could be worth, I mean, what JV? Like last year at some point, Bitcoin had lost like half of its value, right? And then it's clawed its way back, and that's the thing is like some of these currencies, they just change so much and so quickly. It's not like the U.S. dollar. Yes, the U.S. dollar does change in value. The EU, the euro changes in value. The yuan changes in value. The ruble, all these, all these different foreign currencies, they will change in value on a daily basis, but not to the drastic levels that you see with some of these.
Well, how do they
currencies.
handle that now? If I go into a store and I buy all my groceries with yuan, and the price changes, like, do I pay are they using the Washington model where I pay for the cost of the goods, or am I doing the fluctuating?
Well, that's the interesting thing. So obviously in the United States, you can't walk into a grocery store and pay with yuan.
What?
Right? So they can't, they won't accept it.
Nice try though.
But you have to go to a bank to actually sell it. And what the bank would actually do is sell you dollars based off of the current rate of yuan at the bank as to what they would basically buy it for. And so they're going to buy it from you at X rate, which is going to be less a percentage that they would get to do their currency transformation to actually get it back into US dollars and go and sell it. So the bank's going to make money off of that currency transaction.
Maybe that's how it works. You'll go into a grocery store and it's like you sliding a credit card and you pay a transaction fee.
Okay, now you're
Bitcoin
now you're talking. So if you are a Japanese or let's say a Chinese, national, and you're here in the United States, and let's say your company's paying you in yuan, and or Japanese yen, and you have a bank account that's full of yen, when you go and you swipe your credit card, there is a currency translation that occurs. And it is a currency translation that is very unfavorable to the consumer. You get hammered for credit card fees, and you also get hammered for currency translation fees, and they give you basically a currency rate that is not favorable to you at all, right? And you're going to lose money on that transaction.
But it's the ease of use, almost like ATM fees.
That's exactly it.
Yeah, that's why you're getting hammered with it. Yeah.
Yeah.
So does Bitcoin have the same flexibility? Are there cards you can use right now?
I mean, maybe that's where they're going, because how else would you?
There are virtual cards. They have virtual cards and stuff like that.
But not a piece of plastic. That
No, actually, I think there is a piece of plastic that you can have that's backed by Bitcoin that would actually do I think Coinbase and some of those guys actually have a card that's issued that does the translation. I think SoFi would even do it. But yes.
So what if our clients had customers that use those kinds of currency? That would work, right? Because
it would 100% work. Yeah, you can accept that. But again, this show is to not advise people on financial basis transactions. And I'm going to tell you right now, you should not be listening to a sales tax person give you advice as to whether you can accept Bitcoin or not. I would say there are thousands of other questions that you should be answering yourself because of the volatility of it. Hey, think about it this way. I'm a business owner and I sell you a plant and that plant is worth $100 and I take $100 worth of Bitcoin from you. And tomorrow Bitcoin completely crashes and you haven't had a chance to exchange that Bitcoin. Guess what you're left with? $0. So how am I going to pay for my plants and how am I going to replace my new plant? It's a very valid question, whereas opposed to I have US dollars, and a lot of people can say, well, hey, the US dollar could completely collapse tomorrow. Highly unlikely event, right? I would say that it's, very unlikely as opposed to
You'd have other problems.
You would have a lot of other problems.
My
You would
question
not be
is-
worried about selling plants at that point.
Yeah, why didn't you take care of the plant? I mean, don't buy a plant if it's going to die the next day.
Was
Anyway.
it the dying of the plant?
That was the part you were paying attention to?
Yes, exactly. I don't understand anything else, but the plant died and I was sad. Okay.
Well, one of the reasons we started this conversation was about NFTs and the way that the government handled the taxes. So
What is an NFT, JV?
Yeah.
non-fungible token?
You know what fungible means? I had to look this up.
Nope.
Fungible means easily interchangeable. So if it's non-fungible, then it's not easily interchangeable.
Non-easily? That sounds like a double.
I know.
Yeah, it's
it
double
is.
entendre.
Non-easily interchangeable. So I just thought that was interesting.
It is interesting.
Yeah.
Double negative. Excuse me, I was using big words.
But they got into the tax thing really quickly. Can you expand upon that, Tim?
Well, yeah. NFTs are basically, if you go out and you look at what NFTs, are represented in the crypto or virtual currency space, it's like pieces of artwork, right? So Bored Ape Yacht Club is a famous one, right? That it's a bunch of funny pictures of different types of monkeys that guys have, different artists have created and all these other things. And you could go out to an auction site and actually buy a Bored Ape NFT. And there was a limited amount of these Bored Ape NFTs that were issued, and it gave you access to a special website that was like a club that you could go into and share ideas and do other things. And there were
When you're the only one who has it, there's no digital copy of it.
So I can't take like a PDF.
Well, that's the thing.
picture
I
of
can
it?
take a screen grab of it.
Right.
That's the part I never really understood. I remember Justin Bieber bought a Bored Ape for $1.3 million.
What?
It is now worth $59,000. So there's a lot of risk involved in these
My
kinds
goodness.
of things. But they got into taxing these swaps very quickly, which is
Wow.
crazy.
Well, and the big thing is on that. So think about what Biebs. So let's talk about from a federal income tax standpoint. So he took a massive loss on that, right? Now, if he hasn't sold it, he's not realizing that loss. How is he going to realize that loss if nobody's ever going to buy it?
Right.
Okay. So, but another thing is too, okay, well, think about again, that value of that token at that given point. Well, if you're exchanging the purchase at 1.3 million that he paid, what state did he buy that in? And does that state tax digital goods, namely artwork? And if they do tax digital artwork and digital goods, he would owe sales tax on that 1.3 million, and the state would actually get to pay it. But here we go again. Okay, so you're talking about the exchange of a digital product, and there is no sourcing. We can't identify. We know who bought it, but we don't know if he bought it while he was on a plane between France and the UK or the UK and the United States, and where, and how would you determine delivery and where that good's ultimately being housed? There are so many interesting questions around this that we've just never looked at from a sales tax perspective.
You'd almost have to use like the Goldberg 2 out of 3 rule, which is for telecommunications, maybe.
Yeah, maybe.
Yeah.
I mean,
like the primary address of the buyer.
that's exactly right.
That's how you source it.
There you go. And that's in this case, it could be his credit card address. It could be his bank address or his primary residence that he lists on his income tax return. Who knows? But it's something that we just haven't had to tackle yet, and certain states are trying to look at, and they're trying to figure all this out. I've heard that they've talked about a national cryptocurrency, right? A national virtual currency.
Is that what El Salvador is doing, or is just
Well, they've adopted Bitcoin as basically
Bought a bunch.
They just bought a bunch and said, "Hey, this is now our national currency."
Oh, okay.
They
Okay.
have like 2,500 Bitcoin, and they're just, if it goes crazy, they're like, cool, now we're the U.S.
That's exactly right.
We're the captain now.
But in all honesty, like, if we set up our own virtual currency, it's the United States. It's going to be pegged to the U.S. dollar, right? And its value is going to be pegged to the dollar. So it's going to be quite interesting to see what would happen. But I know that the Treasury Department really wants to regulate this stuff. They got to figure out some way to get their arms around it.
Okay.
It is the complete Wild West right now. It really
Like no rules. Like Wyatt Earp's gonna have to come in and figure this out.
In all honesty, that I think is the best analogy, is that we are looking for a Wyatt Earp of the crypto world, and we do not have one. All we have right now is a bunch of Billy the Kids and other folks, running around. So
I nominate JB for Wyatt Earp.
I can do it.
Yeah.
So basically summarize, we are not advocating or voting against buying crypto, trading in crypto, doing anything with virtual currencies. We're not telling you that your business should transact in crypto or shouldn't transact in cryptocurrency. But if you are, strongly suggest that we need to have a conversation.
It's just a hot issue right now, and we have to address it from a sales tax perspective.
Right, and also income tax perspective. And we have people on the income tax side that can assist you with that as well.
Absolutely.
Yep.
Okay, Jenny, take us home. I don't
we
think
offend
we have
anybody?
to. I don't think we offended anybody.
I don't think we did.
Well, we called the episode Crypto Nerds, so I guess we can just apologize to crypto nerds in general. But
Did Elon say something about Dogecoin, or did he change Doge to Shiba Inu?
I think he just said something about it. But there's a lot of coins out there that are crazy.
Okay, I just want to make sure that I didn't say a misnomer earlier
I
today.
don't think so.
Okay.
Do we have to apologize to SBF or no?
Yeah, we probably no. I'm not
Okay.
apologizing to that aspect.
Oh, okay. I don't know.
Yeah.
All right. Obviously, I need to learn more about this. Okay.
Absolutely not.
Okay, he's an ass bag. All right, got it. So, all right. Well, on that note, since we didn't offend too many people for once, which is kind of weird, thank you so much for listening. And if you have any questions or issues you want us to tackle, will you email us? You can email us at taxingpoetic@synexustax.com. And we'd love to take your questions or your haikus or your complaints directed at Tim, which would be fine.
There you go.
And you can listen to any of our other episodes, and you don't have to listen to them in order. You can hit us up on Apple, Spotify, and Stitcher. You can also watch us on YouTube. Thanks for joining us today. See you next time.